Yo, in this video, I'm gonna teach you a financial skill set, which is fundamental if you have ambitions to become a wealthy individual. Without it, you will fail. So stick around in this video and learn something. Those of you at home may already do this yourself, but if you don't, and you really want to grow a business or you want to have financial security, you have to learn how to run a cash book. Now, a cash book can be run in multiple different ways, and as you build a business, your financial management, your financial control gets more and more complex. It goes much deeper than just a cash book. You don't need to run a business for this. This is good for anyone. If you're in full-time employment, if you have no ambitions to build your own business or anything like that, just doing this yourself as a sovereign individual that makes money, everyone should want or should aspire to build some sort of wealth, because wealth means security and freedom. So if you don't have those things, then maybe you're just a unique kind of individual. This video is probably not for you, so you should probably click off it. But if you do want financial security and financial independence, then you have to learn how to manage your finances. You have to learn how to speak the language of finances, which is the language of the world. And the best place to start is by running your own personal cash book. So what does that mean? So cash book. I did this when I was about 18 years old and kept doing it for about 3-4 years. And then I stopped doing it because I'd gotten the principles, and then I was running a business in the music industry, and I applied the same skill set to the business, and it massively helped. If we didn't have it, I wouldn't have known what money we had in the bank, what we were spending our money on, and forecasting what money we would need for investments, music videos, other things. And now obviously in property, it's on a whole different scale. But you have to learn these principles. So what is a cash book? You get an Excel sheet, nice and simple, and you go like that. You have a table. So you got your columns and your rows. And what you do is you take your bank statements. So take 1 month. So we're in June right now. So take May, because you'll have a full accounting month of May. Take your bank statement and stick it on a PDF on one side of your screen, and on the other side of the screen, open up an Excel sheet. You open up that Excel sheet and you have your debits and credits. So you've got your, we'll call it ins and outs just to make this easy. So you've got your in to your bank account, and then you got your out. So you'll have a number here, let's say it's, 100 quid or something, and then you might have a number out which is 200 quid, okay? These aren't the best examples, but you got 100 quid coming in. Where did it come in from? Is it a royalty payment for something? Is it payment for works rendered? Is it salary? What is it? And you itemize what it is. So you then have your columns here. So these are your two fundamentals. You need these two here. And you know what? We're going to use other kinds of markers as well. So let's use a red marker here for the out column. So there's your costs. Then we'll use a nice green one for your in. So that's positive cash coming in. That is negative cash going out. Nice and simple. So you know what your ins and outs are. Then you need to apportion what this money is. What is that money? It's all great that you might have a bank balance you can see and rough transactions in your bank, but if you don't run a cash book, you can't categorize your costs, and you can't start to understand the apportionment of your spending habits over different items. So let's say you got in now here, 100 quid comes in, and that might be just, a wage. So you call that and itemize that as a wage. As you build a business, you start to need to itemize within these columns, and you'll have multiple line items of things that these incomes and outgoings might be. But if you're just doing it for yourself personally, you could probably keep this quite simple with just a few columns and your in and out column. And then your in and out column, at the end of the month, you're then going to have a summary down here of what's come in and a summary of what's gone out. And then you're going to have a balance left over, right? And that balance there is the important one. What's left? What's your profit each month? It starts to give you these fundamental principles. So let's say that's wages. Okay, well then you move over that 100 quid, you keep it in that credit column, but then you go in that cell on the Excel sheet and go equals this cell, whatever that cell is there. And there's your 100 quid, and you've allocated that as a wage. But it's more important on the outs. What are you spending your money on? So let's say you spent 200 quid there, and that might be, in this column, you might have IT and equipment. So we'll call that IT. That 200 quid is, say, something you've bought, like a hard drive, because you're an editor, Jay's an editor, and you might need to buy a hard drive for his work. Well, that's a tax-deductible item. So there's all kinds of other things there with taxes as well, but really we're just looking at costs and spending habits for this video. But that 200 quid there is a part of your IT. And let's say you then spend another 100 quid on something else later in the month to do with IT. You might buy an accessory for your phone or software or something like that, and then you'll have a total at the bottom of what you've spent on your IT for that month. And then you get into the other interesting stuff, which is sustenance items, things like coffee and other bits and bobs. Now, when you're doing this initially, I would advise you have as many columns as you can and itemize the purchases that are in your habitual tendencies. You might go on the same route to work every day and you pick up a Starbucks. You don't think anything of it. Just a 7 quid, 10 quid here, 10 quid there, and you're not thinking much because you only experience the relative impact of that financial outgoing within the moment. You think of it as £10, but you don't think about it as a whole amount over a prolonged period. But your bank bank account feels it. And this is how you can keep track of it. So let's say you can create just a sundry column, which can be for all of those items that, food and other bits and bobs. But when you're trying to understand your spending habits, the best thing to do is itemize them differently. So let's call this Starbucks or, coffee or whatever. So there's your Starbucks column. And you might have a £10 here, which will be shown in your outgoings from your bank statement in the transactions. It will show right here. And then you might have another 10 quid over here, and then another one, and then another one, and a 7 quid, and a 14 quid, and a 15 quid. And then over time, over the course of a month, you might find out that you're spending 150 quid on coffee. And believe me, it's really easy to do, because I did exactly that. And when I started this, when I ran it for myself, it's like, how else do you get a financial picture on your own spending habits? How else do you do it? You can't do it without running one of these sheets, because your interaction with the fiscal world is your bank account, is your credit card, and now it's your phone, and it's so easy to spend money. But if you don't have a sense check on how much money you're spending on any given items, you will never understand your interaction with the world. And your interaction in the world, whether you like it or not, is financial. And for anyone out there who's going, I don't care about finances, things like that, that's fine, but you'll never have financial security. If you don't understand how you're interacting with the world, then how are you ever going to be able to get a grasp on finances? How are you ever going to build wealth? How are you ever going to build a sustainable business? So do this personally. Take a bank statement for 1 month and then do it for another month, do it for another month, and try, if you can, do the last 12 months of your life. And then you'll have 12 months worth of this, and you can start averaging out how much have you spent on coffee month on month in those times. Do you spend more in the summer than you do in the winter, or more in the winter than you do in the summer? And you can start to find habits, how you spend money. And I can't stress that enough. It's so mad to me that everyone doesn't do this by default. Why the fuck aren't we taught this in school? Like, this is like 101. Like, financial sovereignty, if you want it, Cashbook. Learn how to run a Cashbook. And it's super easy. It could take you 3 hours a month, 3 hours. You just do it at the end of the month or the start of the next month, because you need to wait for your bank account to fulfill the last month's statement. And then you just stick it through it. And you have to do it individually. You can end up integrating with things like QuickBooks, so you can have automatic categorizations and things like that, which we do as a business, but you probably don't want to incur the cost. That's about 100, 200 quid a month for QuickBooks. So you can just do this manually for now on an Excel sheet. And then you can have other items in here as well, which might be clothes. How much do you spend on clothes? And you might have a £300 item this month. You might have nothing the next month. But over the course of a year, you might have spent £2,000. And are those clothes in your wardrobe and you've worn them once, or are you using them every day? Or are you efficient with your clothes? You can start to ask deeper questions about who you are and what you do. And I know you might not want to say, well, my financial spending habits don't dictate who I am. Well, then what is you? Who is you? It's not related to your spending habits, because how we spend our money dictates who we are, pretty much. And if you don't like the sound of that, well, tough shit, because how I spend money on my rent, on my house, will dictate where I live. And where I live and how much money I spend, that correlates to where I live. Because if I spend more money, I live in a more central location, I might have a better social life. And then if I've got more money to spend, then I might spend more on my social life, or I might invest more into Bitcoin, or I might invest more into property, or I might have more holidays. And those are experiences and interactions with people and friends. And money is everything, sadly. I also don't like that is the way life is. Maybe with AI extrapolating out into the future ends up doing all of our work, maybe money becomes redundant and purpose is the new thing. But for now, it's all about money, and you have to understand it. So run your own Cashbook. And it's quite simple. In column, out column, and then categorize. Categorize what the income is, because you can start to see, if you might have multiple sources of income, you can see how much you're making on different things. People genuinely do that. It's more common that people will understand where they're making their money, but they don't understand where they're spending their money, because they see them as arbitrary things. I've only spent 10 quid on coffee this week, or this on this and this on that. But as a total, you can end up spending a lot of money. And then you can start to analyze yourself and go, all right, I don't like that I've spent 150 quid on Starbucks this month. What can I do about it? How can I change that? Well, I could, on my walk to work, I could instead just make it at home, have a flask, and I could walk to work. What's the cost difference of me buying in bulk, coffee jar and a hot chocolate thing if you like mochas and another thing, and then you split that cost over how many coffees can you get out of those basic sustenance? How much does it cost me? Let's say in total, coffee, milk, water's not really one, but you could portion a cost to that as well. And let's say out of those items there, plus sugar, I can get 20 coffees. And how much does that cost? That might cost me 7 quid. 7 quid to get 20 coffees. Make it 10 because math's a bit easier. So that's 2 quid a coffee. So I can get 2 quid a coffee that way, or I spend 7 or 8 quid a coffee there. And then I just need a flask. That flask might last me 6 months. So that flask might be a tenner, and I proportion that over 6 months, and I can see how much that flask cost me per time that I use it until I need to get a new flask. Then you compare all of that to your average spending habit on a coffee when you go to Starbucks, and you start to see how much more money you're giving to Starbucks for a habit, but it has a huge financial consequence. And you can do that same calculation, those same maths, and it's quite fun actually. That might sound really nerdy, but it's actually quite fun to do, because you can see how much your life is costing you and how much money you're missing out on that you could be saving up and spending on return of investments. You could put that money into Bitcoin and other things, which brings me on to the next point. Hopefully this makes sense. Run a Cashbook, get an Excel sheet, in and out column, take it from your bank statements, and then apportion them with the costs and apportion them with the income, create the totals at the bottom. Really easy to use Excel, just YouTube tutorial it super quick if you need to. This is basic calculations. You don't have to do anything difficult. And then start to extrapolate the costs and start to see how you spend your money. Frugality is so important if you want financial security. I know there's a lot of gurus and people out there who say, have an abundant mindset and get that Lambo if you want to get that Lambo, finance that Range Rover if you want to finance that Range Rover. You can do that, or you can run a cost analysis and see how much it costs you to do that and how much it costs you to do this, and what are your financial targets and aspirations, and then see which one gets you there quicker. I guarantee you, it's not the more expensive lifestyle-driven thing. It's more likely the frugal approach. So you have to be frugal. You have to be frugal if you want to be successful. You just don't have a choice. That's the only way to do it. So let's just touch on frugality quickly and how it scales. So frugality. So frugality is important when you're just an individual, when you're a person and you're starting this Cashbook exercise, because you'll start to create savings. If you actually act on the information that you get, you'll actually start having a bigger bank account. Now, you don't need to be making a lot of money to do this either. Like when I first started it, I think I was making like £1,000 a month or something, like just about making £1,000 a month. And I had, a few £100 in savings each month that I wasn't spending. And then I went to having more like £500-600 in savings each month because I just arbitraged everything and just thought, what can I save? How can I keep saving? And food is pretty much your biggest cost. That's the one thing you just can't really get around. Food, and then, if you rent, but you don't have to rent, you could live with your mum and dad. There's all kinds of things you can do to save money. Don't have a limited mindset in that sense. People think that they're stuck with costs. Well, you're not. There's always a decision. But what are you willing to sacrifice to achieve your end goal? And your end goal, if it's wealth, frugality, is the way you get there. And you can attain that knowledge on what you're spending individually, and you build that skill set to be able to analyze your own finances. Well then, when you start a business, you can then apply the same skill sets. And in the early days of a business, if you are not frugal, you'll kill the business. And we're actually talking about this on the podcast today. So I'm in a part of a podcast. It's called Ground Up Podcast. Myself, Jack Jiggins, Dorian Payne, and Stuart Wythe. Go check it out. It's called the Ground Up Podcast. We meet up every Friday. We drop a podcast at 5:30 a.m. and it's all about business, property, skills, and scaling, and all kinds of stuff like that. So you will like it if you're into that sort of stuff. So when you're starting a business, if you as an individual take loads of money from the business because you've never controlled your individual spending habits, you're going to dry the business out, and you need to self-invest. When you start a business, you have to keep investing money into it. So the more frugal you are as an individual, the more you can contribute to the business's bottom line in the early days, the quicker it will grow. And it won't grow unless you're frugal, because generally people who don't have control on their spending habits will spend, but in proportion to what they earn. So they might earn £3,000 a month for 1 year, and they'll spend about £3,000. And then they'll earn £4,000 next year, get a pay rise. Then they'll start spending £4,000 a month, £5,000, and they'll spend £5,000 a month. And most people do not have control on their spending habits because they spend on impulse. And the world around us has been designed by institutional capital and shareholder incentives to drag as much income out of you as possible. And I actually ranted about this recently on another video, and I'm going to do the same thing again now. We've actually now, in society, we all goad each other on now as well, which is ludicrous, to think that social expenditure correlates to social hierarchy, which is fucking mental. People think if they buy more luxury goods or high-end brands, or they have a Nike tick instead of a fucking Umbro tick or whatever, that they think that that makes them more interesting, more valuable, more something in some way. That's fucking nuts. That is nuts behavior, that we have deluded ourselves into thinking that there is value in any of that. It's bollocks. And you have to be able to rip it away from your face. We're so indoctrinated with it. These companies, they're spending billions, probably trillions a year as a whole on manifesting our buying tendencies. Look at football, like live football. Look at any websites you go on, targeted ads through social media. They're constantly bombarding us with repeat marketing. And you might not need to make a buying decision there, but when you go into the shop, recognition marketing, you are then seeing something that you've seen a million times before, even subliminally, and then you're making a buying decision. And we associate those things with whatever the brand essence is. So we look at Kim Kardashian or these wealthy celebrities, and they associate with higher brands, and those brands sell products for high margins. And that's all that's going on, and it drives shareholder value. So what happens when you start making more money, just back to the point where if you're making £3,000, you spend £3,000, make £4,000, you spend £4,000, it's because people buy into that zombie consumerism where we worship brands. We used to worship God and a bigger meaning. Now people worship brands or worship a sports team, and they'll spend their money accordingly. It's fucking mental. Like, we need a big fucking hammer to come down on society and just show everyone how mental they're being. Just smash it apart and go, guys, we need to actually spend money on productivity. Yes, we should indulge, but we shouldn't associate it with social hierarchy. Those that want to spend loads of money on lavish goods, to me, they should be ridiculed. It's like, it's just silly. Spend money on experiences is a slightly different thing. We can get subjective with how we spend our money and where the value is, and as an individual, do you derive value in that? Fair enough, you can't blame someone for wanting to spend money on something, but the blame game is a symptom of what these huge corporate conglomerates are doing to us. They're advertising constantly, convincing us that we should buy into this tribal mindset, that support this brand, and anyone who buys the brand is worth more than anyone who doesn't. That's just stupid, and it's stupid because it's all for shareholder value and shareholder incentives. So what's really happening is there's huge conglomerates that are spending money to convince you to buy higher value goods, because now you're making more money. What they can't do is sell you too much volume of a product. You're not going to buy 50 handbags in a year when they're worth, say, 100, 200 quid. So instead, they restrict the supply, they up the price, and they call it luxury goods. That's all they're doing. Yeah, they might put the fancy little glitz and glams and little emeralds and bits and bobs on it to make it worth £4,000 for a handbag. But really, the incentive is the shareholders get rich and you become a mug. You just become a mug to the brands, a slave to the brands, and it's zombie consumerism, and it has to stop. And the only way you can stop it is by running your own cash book and start to understand your spending habits. There is just no other way. Stop worshipping brands. Like, why worship a brand? But at the same time, if you do worship a brand and you think a brand is great and you want to buy their stuff, good on you. Go fucking do it. But just know and be aware of what's actually going on. It's just a part of a complex of conglomerate incentives that are trying to extract as much money out of you as you can. And as you make more money up the pay ladder, they up the price, call it luxury goods, and you will pay for it. And they're getting huge margins. And that's exactly why LVMH is the biggest and most wealthy conglomerate in the world right now. They own all these luxury brands like Prada, Gucci, etc., etc., etc. They're just sold at high margins. The material cost isn't that great. They just are really good at selling scarce product. And that's all it is, selling scarce product. They're a public company, shareholder value gets driven, and you just drain your pockets of higher wages that you could be saving and investing into productive asset classes and giving yourself wealth, rather than just passing it on to some foreign shareholder that you'll never know or never meet or will never care about you. Anyway, back to this. So you have to be frugal. You have to learn how to make more money and save more money. And you do that individually, and then you do that as a business. And when you're running the business, you don't strip out profits to give yourself a high salary. You reinvest into the business to make it grow. And then the business gets bigger, so we'll just put bigger. And then you need to start understanding how to run more complex things than cash books, and start to look at loan balances and investment classes and things like that. But you can get a sense of that before you get to this stage, which is investments. You can start to do investments. And you can do this at any stage. You could be making a few hundred quid a month and you can still be investing money. So you're running your cash book and you're understanding how much disposable money you have now to spend and invest, because you've gotten a grip on your expenditure. You're saving on that coffee, you're saving on those clothes, you're saving on this, and you might even go, do you know what, if I work another day a month, I can make that a bit more money as well. What's your target? What do you want to do? Do you want to own 1 Bitcoin? Do you want to get into your first investment property? Do you want to go on a holiday? You don't necessarily have to save money to invest it in something productive. You could save it just to go on a holiday or treat your parents to something. But if you don't save the money, you'll never be able to afford those things. Personally, I would suggest putting it to productive asset classes, things that are gonna appreciate over time or pay you money and build your wealth. So if you start doing that, you then need to apportion money. So let's say now you've made all these savings, you know what you're doing now, and you're saving £1,000 every single month. And you're also trying to build a business, or you're also doing, something else. You treat your missus every other week or something, which is fine. So what you need to do is tax yourself before you do anything else. Before you go spend that money on anything you don't need, tax yourself. And let's say you tax yourself 25%, which is quite a lot, 25%. That 250 quid is not your money. You've lost it. You've basically lost it. And you can invest that into anything. This is what I did, and it's how I made sure I got started in Bitcoin. Or you could put it into some sort of savings account, just saving it up and tucking it away. Or you could start putting it into shares. You might start putting it into Tesla shares. And you do all this, and you start building up over time. 250 quid over the course of 12 months is £3,000. So now you've made £3,000 with a 250 quid saving. You've still got 750 quid a month. That's 750 quid a month you can then spend on whatever else. But at least you're starting to build in habitual tendencies to save money and invest it. And then you can analyze that performance as well. You start to look at that investment, and if it's a share or Bitcoin, then you'll be able to see it going up, and you'll see that £3,000 might become £4,000 by the end of the year, or might become 3,300. And the savings, obviously, you'll see them just saving up in a bank account. And what's your target? What's your goal? And if that's getting to, say, 10 grand, 15 grand, you might then want to start getting into some kind of investment class, or starting up a company, or starting a new business on the high street, or whatever it is. But until you do this exercise, you don't have the language of the economy of the world and how you interact with it. So this is the first principles in how you can start to take control of your life, take control of your finances, and fundamentally it scales into your business operations, into becoming a fundamentally decent human being with how you interact with who will eventually become your staff, your colleagues, colleagues, your clients, your customers, whoever they are, because you have a grip of your finances, look like a much better individual. You know what you're doing because you know how to forecast, you know how to talk about what money you've spent on what, you know how to save money and invest it into different asset classes. And this is the start of that language. So learn how to run a cash book. I've got shorts on today, summer. Learn how to run a cash book, start to look at investments that you want to do, set those goals. Don't have a limited mindset and think, I can never invest, I don't make enough money. Well, start saving more money, get a better grip on your finances, and then you should be able to do this. Even if you're only making $250 a month and not that 1,000, and take 25% of that, 50 quid a month is what you're investing in, let's say, Bitcoin or something like that. And this is how you start on the road to wealth. Doesn't matter what age you are, you need to learn how to do this. Cash books, understand what your spending habits are, stop spending on stupid luxury brands and brand endorsed bollocks, save your money, don't give it to shareholders you never meet, and start to invest. If you don't invest, you'll never be able to build wealth whilst you sleep. Anyway, hope this video has been good for anyone who's watched it. This changed my life when I first did it, and it will do the same for you as well. But anyway, big love, subscribe, drop me a comment for anything else you want to see me do and talk about. I'll be happy to do it. Like the video, and I'll see you in the next one. Boop.